Welcome to the Real Estate Vibe Show. I'm your host, Vinky Lumba, and today I have a very special guest, my good friend, Dan K. Dan is an active capital raiser, an equity owner, and also a passive investor. Dan is the executive vice president at Rocket Dollar. Dan has personally raised millions of dollars from accredited investors and family offices. Some of Dan's superpowers include self-storage, self-directed accounts like solo 401k and self-directed IRAs. Today, we'll learn about self-directed IRAs and some of Dan's capital raising secrets. Welcome, Dan, to the Real Estate Wife Show.
Hey, Vicky, great to be here, and congratulations to your daughter. I saw the wonderful post on her wedding. Such wonderful news.
Thank you so much. Appreciate it. So before we get started, I would like you to share your background with me and also share how did you become what you are today?
Yeah, great. So I grew up in Scranton, PA. So, politics aside, I played on Joe Biden's Little League field, and eventually as I made my way to college, rode with Trump Jr. So I said, keep the math easy, graduated in the class of 2000. My dad was a high school principal. My mom was a social worker. So in the spirit of Kiyosaki's Rich Dad, Poor Dad, at least within our little house, we didn't have the deep rich dad mindset. I feel that was the generation before that grew up during the Depression. We're a bit entrepreneurial. So with all that said, it probably took a good, anywhere from 10 to 20 years of my professional career to really put on the rich dad hat. Like a lot of us Gen Xers and folks a bit older with a little bit of gray hair, we went through the corporate route. We went to the best schools, et cetera. We maxed out our 401ks. I had the benefit of going to Wharton, working for GE, Merrill Lynch, and then 2008 happened. And I think I had a little foresight, weather aside, my wife, who's from Mexico, and we wanted to return to Austin, Texas. So I joke, we kind of beat everybody else that's moved here post-COVID, coming back here in 2011. And the benefit here is I had a mix of, in the daytime, working in fintech and real estate tech, but being introduced to folks that were doing the equivalent of crowdfunding before crowdfunding. My light bulb moment was I was a co-best men in a wedding. So for all of our Pete Davidson fans, a big shout out to Staten Island. It was the coldest day in Staten Island, and I asked the other gentleman, "What do you do?" He said, "Well, I flip houses." That didn't mean much to me. He said 15%. I got excited. And then he said, "Did you know you can use your retirement dollars to invest with me?" And this was the big, where my calling in life came through. So for the past decade, I've naturally, just as you and I first met, evangelized, "Hey, do you know you can use your retirement?" And my asset class of interest and I'd say niche expertise for the past decade has been self-storage. So which is now front page news for everybody, but at the time it was on the back burner. But this was just my typical conversation. And I, like many folks, had a custodial self-directed IRA, but then learned of the checkbook control solo 401k. And from here, have been able to guide well over 1,000 capital raisers, mainly sponsors themselves, and thousands of more folks, accredited investors and non-accredited investors, that this world is available. So for me, it's been a lot of kind of little steps, and every day, trust me, or every few months, I'm learning more about whether it's a new product being registered, and then, once again, sharing my experiences from the past decade with both investors and capital raisers alike.
Great. I also wanted to ask you this question. I read in your profile that you have equity ownership in 10 plus commercial real estate properties, and also you are passively invested in self-storage, multifamily, residential, industrial. Wow, I mean, that's a huge portfolio. How did you grow to that portfolio?
I'm not focused. No, kidding. You know what it is? I mean, as I said, I'm in Austin, keep Austin weird, keep Dan weird. The spirit of diversification that, our parents grew up with the 60-40 stock bond and having a stock portfolio. I feel, and for me, this just came naturally and easy, that although it's great to be a deep expert, say ride the multifamily Class B wave, which can be very lucrative and very smart. For me, particularly as a passive investor, I said, well, I want different asset classes, different geographies, different timelines from 1 year to 5 year plus, and then different deal types, which at the most basic is it a value add paying dividends today, or is it going to be a development project 3 to 5 years out? So this is kind of the mindset that I had, and not just in real estate. also with private loans, with some startup investments, which have different risk return profiles. And, you know, the cherry on top for me was talking to these family offices, very high net worth folks. And even in front of open doors, they say, you know, I have less than 10% of my portfolio on stocks and bonds, and I'm in different private sort of things. So, you know, from that sort of guidance, it became easy for me. And as you know, I'll credit the founders, myself included, at Rocket Dollar for 21st century diversification. I do feel going forward, many passives are going to want to be in multiple asset classes, even say under the real estate portfolio. So I always feel, you know, you walk the walk, you don't just talk the talk. So I have a lot of, you know, LP checks across the board in different asset classes.
Great. So let's talk about your superpowers. You know, earlier I was reading your bio. So I read your superpowers are self-directed IRA, solo 401k. So how did you get started there, or what's this all about?
Yeah, so I mean, for me, and let's rewind, you know, 10, 15 years, and I'm a kid originally from the Northeast. I was a beach bum a few summers, including the Clinton Lewinsky summer up in Martha's Vineyard. So I always have a soft spot for Cape Cod. But, you know, long-term living in the Northeast probably was not going to be my calling. So I had a feeling, this is, you know, picture a cold January day at GE in an office in Connecticut, and you look at your 401k or through the Fidelity portal, and there seemed to only be about 10 options, or at the time. And some of these were target date funds, you know, the year 2040, 2050. This didn't seem tangible to me in any way, shape, or form. I felt there was a better way. And as I said, the gentleman, my real good friend now, I've since invested with him 30 times. We finally, you know, got together and said, how many deals have we invested in? You know, 30 times over the past decade.
Wow.
But the catalyst was, like many folks at different stages of life, you're buying a house, you're out of school, you have loans, another child, a wedding. Guess what? You may not be as heavy on the liquid side, but for better or worse, we all probably worked in that corporate job, at least in our 20s, that we can tap into that retirement. So I went through one of the older, I'd say, legacy custodians. I still needed a fax machine back then and a scanner. And back then, I mean about, you know, a decade ago, arguably 7, 8 years ago also. So not that long ago. But I share that as a point because a lot of folks say, how come I haven't heard about this? And there's two reasons, I think. One is, you know, it doesn't behoove Wall Street. It's not profitable for them. So no surprise, you don't hear about it from Wall Street. The other thing I like to say, it wasn't, as I wear my fancy pink shirt or yellow shirt today, it wasn't country club cool.
Mm-hmm.
It wasn't quick and easy to sign up for an account, make an investment, reinvest. There was a lot of paperwork. I joke, it's almost like choosing to go to the DMV just for a checkup, you know, to say, hey, can I get a new license? You're not going to do that. So, you know, with that, but I did start through the traditional custodial route. And once again, vis-a-vis just having stuff sitting in my Fidelity account that I couldn't touch for another 30 plus years, this was awesome. This was great. But then over time, there's situations, whether you have a child or you get busy in life, or it's just the timing. Somebody says, hey, you know, I have a rounding error of 35,000 at the end of this great opportunity. Do you want in? But I need the money by Friday. And this is somebody you know, you trust, et cetera. I'm not saying just go wild out there. The custodial accounts would not work in that situation. The timing just won't work out for multiple reasons, vis-a-vis having, say, a checkbook account. Which I learned of probably just frankly, you know, the last 5+ years has been hugely advantageous for me.
So your company, this Rocket Dollar, right? That's all about the checkbook control, right? What is exactly your business model?
Yeah, and so and I love how you reference a checkbook control, because a lot of folks say, well, we offer self-directed IRAs. Great. And I get it. As self-directed IRA is kind of like the Gatorade sort of term here. Rocket Dollar, and I compliment Henry Yoshida, our founder, because once again, his previous company, Goldman Sachs, bought 18 months in. So pretty bright guy, really knows the retirement space well. His thought is, well, what happens if we can eliminate all this friction and make it easy as possible? And also share, you know, Henry's a licensed realtor. There's at least 1.3 million realtors in the United States, kind of a crazy number. And I share that because by default, you're self-employed, you're 1099. You should be made aware of the solo 401k, of these checkbook control accounts. So to get to your question, Rocket Dollar offers checkbook control self-directed accounts. So I share because if you qualify, and we can get into detail, and have qualified self-employed income, you can open the solo 401k. And the solo 401k, I love old movie references, but I feel it's like when the Wizard of Oz goes from black and white to color, because the old SDIRA custodial, I say it's black and white. It's kind of like when your parents gave you an allowance, in high school or college. You know you're going to get it, but you're going to go back and forth. What are you spending? Da, da, da. You're going to get the money, etc. Whereas here with checkbook control, it's literally at your fingertips, just as you would want to invest anytime you want. You have access to your money 24/7. Very powerful and different. In addition, much higher contributions, the ability to take out a loan. You can have the equivalent of a pre-tax and a post-tax do on the spot Roth conversion. So for all of our Peter Thiel fans out there that want to have a crazy Roth account, you can do all this within a solo K, whereas in the SDIRA world, it's a bit more limited. So our push, and we even came out of the gate early at Rocket Dollar, was with the solo 401k, taking advantage of South by Southwest here in Austin, Texas. We went out to Money 2020, the big show, and I think there's about 10,000 companies submitted. We were in the top 2. When we pitched to the VCs, we were the top one, and then we actually had a pitch in front of Shaquille O'Neal, and well, I guess Shaq doesn't need a self-directed account, so we finished in 2nd place. But point here is that I share all this color behind it because it really validated where not just us, but the VCs and the money to be private equity. So this is where we think checkbook control is going to be in the future. Let's get on this train early.
Great. So how long did it take you to grow get from ground zero to where you are today? I mean, you need a lot of clients, right? To be participating in the program or joining this checkbook control program in order for you to generate the revenue.
Yeah, I mean, the benefit here with the 3 founders and the 5 of us I consider on the founding team is that we were odd ducks. We were passive investors before. Some of us sold companies, some of us stood up our own funds. I think one gentleman had either a broker dealer or a small brokerage. So I'd say we did a lot of things that typical even startup folks or startup VPs and above were not involved in. So this was our world. Doing a seed raise. This wasn't bootstrapped. There was very smart thought. I think we're very wise with our investors' money. I know some other folks that have raised very large amounts. Like anything, maybe that was the route to go. We're a little more diligent with our money. But yeah, I mean, the premise was to come out of the gate with a better product. And since, let's fast forward 4 or 5 years, I mean, you have well into 9 figures that have moved across the platform. We probably had at least, X hundred folks in your shoes that have raised money that have benefit from knowing about this. HubSpot deemed our knowledge base, I can't even call it an FAQ because it's truly a knowledge base, one of the top in the world, kind of the top in this space. And in addition, podcast webinars. Our purpose here with the fundraise, frankly, was to be an education machine, get known. And I'm not sure if we had a COVID crystal ball, but consciously, once established and once, as they say, get above the fold on the marketing side, to really become, double, triply smart on the development side right now. So, for folks in K, this is a tiny shop in Austin. There's some really big tech muscle and development muscle that goes into this that we feel, once again, the goal is to democratize this so everybody can open this sort of account and benefit and have 21st century diversification.
Oh, that's interesting. I know retirement accounts has like trillions of dollars. Earlier, I was talking to somebody. In today's date, is $31 trillion sitting in the retirement accounts, right? But the question comes to my mind is, how did you come about with this an idea? Let me spin this something like checkbook control thing and get people away from all this paperwork and offer some kind of, and a seamless process for people or easy process. And also, how did you know that you'll be a perfect fit for it?
Yeah, so, the nice thing is that the product was already around. It was legal. And, I admire folks that are also, God bless everybody trying to get something done these days. But my point being here is that, the self-directed IRA was around in the 70s. The solo 401k became legal in the early 2000s. So from that, I say all the, the high level legal stuff was there. Many folks, whether it were some of the traditional custodians that jumped in and out, I believe even the Fidelity Schwab jumped in and out lightly in this space. Many one-off, I'd say lawyers, CPAs have set up these sort of accounts before. So we had the benefit, and frankly, probably some of us on the founding team even had this account, once again. So we've had experience, we had touch points with some folks in this space, where at the same time, a lot of us, I mean, pick the company, Google, Merrill Lynch, et cetera. We came from, we felt was the best on the tech and the finance side already, not just us, but once public, not yet, but our initial investors, you have some real big heavy hitters of folks that in a very positive way were headliners across the broad, I'd say, fintech landscape in the past 10, 15 years. So, with all that, this was the mindset to say, in that spirit, how do you make almost a quick, as seamless, as frictionless as possible process to sign up, and then once again have that checkbook control. So this was the spirit behind the company, why we launched with the solo 401k, and the benefit, in my opinion, of the checkbook control going forward.
Oh, and also, if I understand correctly, you have some experience, previous experience in business development and marketing, right? I read it on
Yeah.
LinkedIn. So how did that translate into this your role?
Yeah, like anything, right place, right time. I mean, so I half joke, especially with the younger folks, so that my mentees, I say, listen, you guys are all hot shit, ex Google, ex this, ex that. I'm like, I was XG. That was the top company in the world 15 years ago. Seems like forever ago. So it's pre 2008, but that's the world that I joined. And so why I share that is, Jack Welch, when he left, he didn't just go away. It took a good 5-6 years. So I had the benefit of all the Six Sigma muscle. I have a PMP way back. But at the same time, Beth Comstock, or CMO, brought in all this gold standard marketing. So things such as segmentation, potentialization, and trust me, there were some global projects waking up at 3 a.m. doing stuff, but it's a very healthy, I think, professional muscle, much like a doctor gets in his residency, that I put together. Secondly, I view business development almost as evangelization. If you're not wired to be this way, or somebody said, well, you should have been a priest because of this, it's you're probably not comfortable in BD, but I feel comfortable being that sort of tip of the spear. And like anything, not just here's a product, here's an idea, but here's the how you do it. Here's how I've done it personally. If me, a little kid from Scranton, PA, can do it, everybody else can do it here. So this was kind of the 1-2 punch. And, concurrently during this time, as I've been an investor, I was raising money for self-storage, for example, over the past few years. I was doing some pretty intensive, frankly, things that people hire McKinsey for, I can do in my sleep with go-to-market strategy, et cetera. So those are some of the projects and companies that I helped over time, which, once again, translate as you and I mean, kind of comes down, where do we feel called, or where's it best to spend our time? So kind of an embarrassment of riches and invitations now. So this is kind of across, so I view this all, I mean, basically it's just different pie charts, risk return, benefit cost, et cetera, is, I was fortunate to have that muscle early that I either tried to share with folks founding, or like anything, folks that are raising or for the first time, maybe a little uncomfortable. One simple sentence. So if there's any takeaway, and thank you for everybody listening today, is that, did you know you can use your retirement dollars to invest passively or to raise money? That's it. If you have that, you have a copy paste from like a likes of a Rocket Dollar, it's going to help you tremendously.
Wow, I seriously like that analogy. But one question I wanted to ask you is, everybody starts from somewhere, right?
Mhm.
Initially, when you started, you did not have all these connections, or you did not have all this network, right? So how did you make these connections with the high net worth people, or the people who has the largest amount of sum sitting in their retirement accounts?
Yeah, I mean, like anything, I mean, life throws you a lot of curveballs and gut punches, et cetera. So I think it's just be yourself, and like anything, by not being yourself, you probably could have some short-term gains and stuff, but by being yourself, it helps. And we were talking to kind of our parents' guidance. The fact that I ended up at Wharton, that was through guidance of an uncle. Definitely, I was not the smartest guy or gal there by any way, shape, or form, but in some ways, it gives a little cachet, gives you a little more credibility to step on certain family office stages. So, as I say, while my sister was having fun at Pitt, I was heads down in the books at Penn, and that's kind of the way it was. Anyways, with that, mine has always been the education, or the whole like versus trust. We can like a million things on Facebook. Trust is when money moves. Trust is when, we take an hour of our time mutually to do this, to share with an audience. So I think that was shown to different family office worlds. And they say, hey, I kind of like your story and your mindset. We're going to put you on stage. And part of the reason I think why I'm diversified, although I'm naturally wired, is I can talk really strongly about startups and investing in startups. I can talk strongly about investing in real estate. I can give graphs on, why I have a teeny bit of crypto in my portfolio. I'm not a crypto expert, but how holistically from a risk return standpoint, it sort of makes sense. So that, a lot of education. I think I was an early adopter of writing articles, of blogging, of looking to be on podcast. Rocket Dollar, I said the big thing with Rocket Dollar is education. We came out of the gate very early with a podcast, with I said award-winning knowledge-based blog articles, etc., which is, I'd say, kind of getting a post-COVID 2.0 that you'll see a lot more education coming out. So I think from there, and then a final note for folks to think, oh, it's easy, you go to a family office show, you get a $10 million check. No, not that way. Could happen, and I compliment Richard C. Wilson on his classes and his community of how to maybe target yourself better. But like anything, you do have to commit time and money, I would say, more so time, to being part of these communities, being seen, having conversations, and frankly, not selling, but learning about different mandates. And like anything, you want value out of the conversation. So even if it's not my product and somebody says, well, we're a real biotech shop, through these conversations, it would behoove me to know a really strong biotech opportunity or somebody to speak with. And these are just in-kind sort of introductions. So that is the ecosystem that I built up. And I think folks know, well, if you have a chat with Dan, there's going to be some nugget of value or introduction that comes out of it.
Right. So did you join any mentorship program too for this, or?
It's a great question. I've had different, going back to GE, great mentors. I have peer level. John Manus from Pinnacle Storage is a good friend. Long thought of him as a top operator in the space. He just exited for 9 figures to one of the REITs. He's one of the mentors, I'd say, in this sort of world. The founders at Rocket Dollar, everybody has deep, I think, strong superpowers here. So it's almost a peer/mentor, but we know as we're talking, hey, I need advice on this, or let's just talk it out. Likewise at BV Capital, where I've been associated with for the past few years, everybody has a real deep superpower here. So, that said, are there other, and I've had different career coaches, life coach. Could it be beneficial to have a dedicated person? Absolutely. Part of my 2 weeks, so I'll be unplugged the next 2 weeks here, is to really go through that. So one final thing I would share on that is, something like a Vistage community, a lot of small owners and operators. If that syncs with you, I'm just part of a great group here in Austin. It's been hugely beneficial. And these folks do not do what I do in any way, shape, or form, but we're all, at the end of the day, small business owners here. So it's been wildly helpful.
Oh, that's great. So let me ask you this question. Do you do hard money lending too, or no? I don't know why I'm thinking.
I do. The first gentleman I referenced, although it's backed by first lien, but separately, I do a fair number of hard money loans. Sometimes it's called that, sometimes it's not. I'd say my most profitable and comforting has been to female entrepreneurs. I've even done what I call angel loans. So even before the angel investment, where folks thinking, hey, I'm thinking of this idea. I don't even want to tap into my own 401k savings, etc. Or can you be my line of credit, cheaper than a bank, etc. So these have been very fruitful sort of discussions here. Separately, the risk return, it's 2 rock star younger gentlemen that I met through the Capital Factory Mentor Network. They have a unique offering that it's going to be double digit. There's obviously a risk component into it of the returns, but I see a sort of benefit. So whether it's been true, hard money and pray you get it back, although I'm not fully there, but more if it's asset backed, if it's revenue backed, I'm pretty open to say, like, I'm not going to be as strict as a mega bank and saying, here's all the collateral, and here's everything that I need, or the asset type. But it's also a good way to get to know folks too. Once again, I go back to the like versus trust analogy. Obviously for a portion of my portfolio, these are much smaller checks, the first one around, but you really get to know folks' business model. And I always reference, first gentleman here, we've done 30 deals over the last 10 years. And it's on such wonderful autopilot that, I might not even be the first lien on one of his properties, but just kind of the trust level. He's never missed a payment in 20 years. I like to say it's a Sunday night, like, hey, pick out your, 23,500, pick out your random number. And then with that checkbook control, he has it by Monday. And I'm earning interest on that. So I rarely, especially my retirement dollars, I rarely sit on cash because a lot of these short-term buckets I have. And then these longer-term discussions, I'll know some of that money will come back within 3 months or 6 months that I can roll out to maybe a longer-term deal.
Did you lose any money in any of the deals?
Of course, yeah.
Oh, let's talk about that.
Where to start? Let me grab my. Let's put a little whiskey in here. No, so I laugh a lot because my first passive investment was a comedy tour. Haha.
Oh.
I remember sitting in Dallas with my wife and saying, "Hey, sweetheart, these might be $1,000 write-offs," which of course, throw that under. No, it was going to happen anyways. But so the vision was, this was a good decade plus ago, that targeted demographic. We're gonna have a comedy tour. This is when DVDs were still popular in certain parts of the world. Royally blew up in our face. That was one. A second one, and this is where kind of going back to, I'd say, my real estate checklist. I know you just got through a great wedding. We were pregnant, baby bliss at the time, and a real good friend, a very conservative, from I'd say a business standpoint, CPA, said, hey, talk to my buddy. He's finishing up a house. Austin. Obviously, things are crazy now, but even then, it was next to a golf course, beautiful neighborhood, 3-month loan, 15%. Oh, this is a layup.
Easy.
Bought the house. Fast forward 3 months, didn't happen. Our son was where I'm like, I'll give another 3 months, didn't happen. And then it's like, wow, you start really learning about different state laws and how things aren't in chronological order. Long story short, and a very painful, I think I was back up in Pennsylvania at my parents' house, and having whatever, cold, dark weather, etc., perfect storm, as they say, but was very fortunate to get out at 70 cents on the dollar.
Oh.
Could have been horrifically worse, but so many sort of lessons learned. So I take a few takeaways from there. First is when somebody's a one-person shop, regardless of who they are, you just got to be very, I would almost say, I don't want to say do not, but you have to be cautious because anything can happen. Mm-hmm. And there's just so much superpower, et cetera, one person has. So that's one. Secondly, I'd say when there's a sniff of something not going wrong, to lawyer up immediately. And even if that causes bad blood, or you feel, it's not your personality, it's just something you have to do, especially if you're not as familiar or versed in this space. And that's as simply as filing a doc. You're not going heavy into like court case or settlement. You're just saying, whoops, you missed on payment. I'm formalizing it on this date. And that can save you even that can save you tremendously later. So I guess 2 pieces of quick advice that I've since brought in, but particularly it's just a one-man and one-woman shop. It's just tough. There's a lot of stuff going on. So there's a bit of hesitancy if somebody's solo gunslinging here.
Oh, you said it very well. So what is your current focus now? Are you going to keep on doing what you're doing or scaling?
Yeah, I love what I'm doing, and trust me, there's a few companies I actually would enjoy. I was in big company 10-year portfolio companies, opcos 10 years. There's certain fintech, real estate tech companies that I think would be a great ride for another year or two. That said, I've not been W2 since before COVID, and like you, I really enjoy the scheduling flexibility. I naturally think in agile. What I might do 2 hours, prioritizing ABC sort of level from here. If I'll continue to educate, dollars aside, that you can use your retirement for this. Part of why I got, in bed per se with BV Capital is they do multiple asset classes, primarily here in Texas, but otherwise. But you have different types of multifamily, workforce housing, student housing, triple net industrial, which is a good asset for that, say, like monthly distribution. Personally, I've been around self-storage for a while. So I think at the very least, as a LP investor, I'll continue to be diversified. And then at the same time, based on which sponsor makes sense. And it could even work backwards. It could be an investor relationship that says, here's my mandate, literally, here's my check. Who should I fill it in with? And then working backwards from here. So as always, there's always, folks that I meet, whether it's for us about retail, storage, et cetera, that I, at the very least, to make an in-kind introduction, really want to do for folks that are kind of up and coming in this space. And then going back to your point before on some of the larger money, there's some really good opportunities, even from lending your balance sheet out. I mean, once again, how do the rich get richer? Well, if you're sitting on 100 million, you can be a co-guarantor, probably get, 4 to 6 points for not even moving money. I mean,
Doing anything.
not too shabby, there's that. And at a more micro level for us, as we alluded to here, kind of the short-term notes, but the final thing kind of in the middle of this, I think a fair amount of folks have properties, whether it's a beach house or otherwise, and some folks are selling because they feel it's at some top, or, my friends here in Austin have been here 40 years. They want to sell, go on a cruise, but then also not pay taxes. Well, they don't want to look for a 1031. They don't want to own and operate. So what's in the middle of a 1031 in taxes? It's a Delaware statutory trust, DST. So that's another thing that I think is going to become more common for two reasons. One is folks, they don't want to pay taxes, but they want to keep the benefit. Otherwise, you can't find product at the exact dollar amount, and you don't want to have any money to boot, aka pay taxes. So this DST is in the middle. And a final point here, historically, DSTs have primarily been a portfolio, pays only about 4-ish%. I know there's some sponsors out there that are flipping the script and offering single product, real kick butt, double-digit returns within this DST benefit. So, I think it's going to become relatively more common in certain niche circles going forward.
Yeah, I think we are short on time. I would love to learn about DST. Maybe in the next session we can do that, just focus on DST only. But let me ask you one thing. Can you share with my audience some of the networking sessions or meetups that you go to where people can make good connections for themselves?
Absolutely. So, I'm here in Austin, Texas. Beer, barbecue, tacos. If you're vegan, we got some good vegan trucks here. So all on me, head to toe. But whether it's Austin or otherwise, I feel there's, especially now, we're kind of past a certain COVID wave. I think there's a fair number of weekly meetups. I go to a weekly lunch here Tuesday in Austin. There's a monthly dinner I go to with a variety. It's kind of everything we talked about here today. Whether you're a passive investor, an active, you're an owner operator, or you're a developer, you're construction, you're a roofer. These are really good ecosystems I'd suggest. Meetup.com is a great place for an initial sort of look. In our world here, I think from I'll say a little more of an agnostic, meaning that it's not a specific sponsor sponsoring their show. I think Hunter Thompson, IREC is a great way to kick off the year. Best Ever Conference, as it sounds, it does bring the best out there. So, I commend Joe and his team for that. There's so many other folks that I admire. I don't want to see my playing favorites.
One is sitting in front of you.
And I'd love to. I'm sure it's flashing across the screen right now. As I said, there's a lot, and like anything, what I think is great, and I know you've shared this, is that there's a fair number of deals where, especially at that tail end, for folks that are interested in getting to know you, and I won't say you specifically, but I'd say, generically wise operators tend that last 100K or 250, chop it up a bit smaller. So folks, once again, the like versus trust, get to know to trust you. Maybe that leads to a show, and then otherwise, depending on what the offering. So that's just kind of my natural sort of world. And then otherwise, because we did talk a little bit of family offices, IMN and Opal are the Coke and Pepsis of the world. I just got back from Newport, Rhode Island, and I was with IMN previously, and the other Newport, I feel, they're part of the country. Richard C. Wilson at Family Office Club, I think that's great education for folks that really want to embrace to see how this world plays out. And Marty Sakata, Neil Green, there's many other folks here that right place, right time. And then a final thing, just what I think is very unique, but big picture, the pension world I find fascinating, although it's not to say you're going to go in and get a sale. This is a 10, 20, 30, 10-year sales cycle at least. But I think kind of reading the magazine, seeing things, learning about this, it's a very, it's for me especially, so, I referenced my dad was a high school principal, I was a social worker. I mean, their mindset was retire, pension. There's a lot of folks that are in this, and frankly, it's probably better that a firefighter is not thinking about diversification during the middle of a fire. And I say that a little bit tongue in cheek. But some folks aren't wired to have a diversified portfolio. So it's a big number. And I think, once again, that folks that are called to build these, 9-figure funds and such, it does behoove you to maybe dip your toe in the pension water, develop these relationships now, because if you do grow as you say you're going to grow, I think you're looking at, very, very fruitful checks down the road.
Yeah, I agree on that 100%. So share one golden nugget with my audience.
Get easy for me. Did you know you can use your retirement dollars to invest in real estate?
That's good. I love that. Leverage the $31 trillion. You don't want to miss out on that, which is awesome. So this brings us to our rapid fire round. I'm going to ask you 5 questions and you're going to answer in 1 word or 1 sentence. Ready?
Okay. Yep.
All right. So what is one of the best skills that you have learned over the years that work for you all the time?
Humility.
Nice one. What is the best book that you have read and recommend?
Recently, The Storm Before the Calm by and the New York Times author.
Great. What is your biggest passion?
My son. We had 1 child late in life. When I'm with him, I'm all in completely.
Great. And you said he's trilingual. He speaks 3 languages.
I give kudos to the Austin public school system. So he came out of the womb speaking Spanish, gets a little bit of English from me, and has shown, kind of following in his godfather's footsteps, to take Mandarin for his 3rd language.
Wow, that's amazing. In 1 word, what does life mean to you?
Experience.
That's great. Life is all about experiences. That's about it. If you got a chance to change something in your life, what would it be?
Loaded question. Revert to the mean. And I share because I think, and I say this for all of my passionate and emotional folks out there, I think sometimes it's good to slow down, take a breath, establish sort of roots, I think, in a certain way. Sometimes it's great when you have that ability to go where you want to. You want kind of that nomadic sort of lifestyle, but other times there is certain benefits of getting grounded, getting rooted. So like anything, I think I'm there. There's a way to go, but there could have been certain times. That said, I may not have had certain experiences if I was deeply grounded. So, but it's a balance. So I think getting to know yourself in multiple, maybe this is for our next discussion, nothing to do with real estate, but whether it's, from Myers-Briggs down to Berkman method, to human design, to astrology, etc., to really get a view of yourself. And I think a lot of our engineering left brain friends would actually enjoy that also, to get to know that. I think it's pretty positive. So that's something I also recommend to folks. Just at any
yeah, I like that. That's really good. Take a pause, respond, not react. That's the best scenario, And how can people reach out to you, Dan?
Absolutely. So LinkedIn is great. I'm on LinkedIn regularly. Just say, hey, I heard the world's greatest podcast here. So please do. And then as a thank you for our folks listening here, I joke, if you can spell it, you can get it. DKRYZANOWSKI, 12 letters, will get you a chunk of change off a Rocket Dollar account, should you feel inclined. And then any of our hybrids or fellow sponsors, reach out to me one-on-one also. I can share a bit more with you.
Thanks, Dan. Thanks for coming to my show. I really enjoyed our conversation.
This was awesome. Thanks, Vicky.